Hey guys, I wanted to come out behind my computer in front of the camera before we get started, and we're going to start pretty soon. So great to have you here. We're going to start probably on time, maybe about 30 seconds late. Patty, I want to make sure that you can see my screen and you can hear my voice to make sure that I'm not going to be speaking to myself. It's great to have you guys here. My eye is actually hurting a little bit today. So I'll be putting some eye drops in it. But anyway, I'm good. I hope you're good. And give me a couple seconds, and I'm going to jump behind the computer, and we're going to get started. Okay, give me a second. Hey everybody, this is RC Peck. Thank you for being here. This is my PeakGold training webinar. Yeah, it's great. Like I was mentioning before, I woke up this morning with one of my eyes hurting me, so I've been putting a lot of eye drops in my eyes, and that seems to be soothing the problem. You may have questions during this training, and if you do, or when you do, just go over to the questions tab or section on the GoToWebinar control panel and just go ahead and type them in there. And if we have time at the end, I will go ahead and answer as many as I can. You're also probably going to want to maybe take some notes here and there too. So thanks everyone. The name of this is called PeakGold. And I'm going to tell you why I call it PeakGold and why we are in a PeakGold cycle. Now, just so you know, if at any point you get confused or tired or annoyed by me during this conversation, the one thing I just want to point out to you is that the whole point of this conversation with you is to get your money on the blue line. Now, if you look at the screen here, there's two squiggly lines. One is a red one and one is the blue one. Now, the red one did pretty darn well between 2000 and 2011. That's gold. But the strategy that I built to leverage this thing that I call PeakGold is the blue one. And you can see that really skyrocketed. So even if you were on the red one and your money grew by over 400%, you would have easily done better than the market. And this was the best 12 years of gold from 2000 to 2011. So the point is that there's always a better way if you know the information. So if you get confused, you say, okay, RC, what was this about again? That's right. It's about getting my money on the blue line, having a life that has more choices, more security. And the thing about this strategy that I built, it's called LTEC Gold, and I'll talk to you in a little bit about why I call it that and why you may want to know about it, is it is agnostic. It's not just go all the time, buy ticker symbols, buy stories. There are periods of time where you may not want to be in a sector that you love because it is correcting. And just as I showed you the best 12 years of gold ever, here are the worst 3 years, which happen to follow the best 12 years in gold. From the top of the chart to the bottom actually fell 42%, but then it rebounded up and it was only quote unquote down 23%. LTEC Gold during the same time period was up about 2%. The point of me telling you this is it is dangerous to fall in love with your assets or with your ticker symbols. What you want is a strategy, and a strategy that can be agnostic to what is going on. So I'm going to go ahead and talk about that more and talk about our agenda. So I want to talk about where we are today. I want to talk about why gold and not something else. Literally, why not Microsoft stock or technology stock, but why gold during this cycle that we're in. And I want to talk about why gold stocks don't matter as much as this one thing, and that's going to be a key point that you're going to want to make a note on. And then I want to talk about how you can get access to my research. And then if we have time, I'll take questions at the end. Okay, so guys, I am a registered investment advisor and a certified financial planner, and I have to put in an SEC disclaimer. So please let me just read this to you and we can get into the content. The opinions expressed in this training is for general information purposes only and not intended to provide specific advice or recommendations for any individual on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, please consult your financial advisor prior to investing. Any past performance discussed during this program is not guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested in directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek direct advice from a licensed professional. Okay, thank you for that. So guys, look, we are inundated with information. We live in the age of distraction, and it is only getting more. The information is only increasing. The amount of distraction is only increasing. Here's Mark Faber on Bloomberg talking about why he thinks the market is going to crash. By the way, he almost always talks about why he thinks the market is going to crash. But we see this, we hear this with our brain, and we get concerned. And it's not just Mark Faber, it's Eric Sprott. He comes on and says why, gold's going to go up. And the problem, and, I'm not saying these people are bad people or good people, but look, for 3.5 years, Eric Sprott came out and said, gold's the place to be during 2013, 2014, and 2015, and gold fell 43%. So it's easy to get overloaded with inflation, that's true, information. And what I want to point out too, one of the takeaways I want you to get is more is not more. Knowing what is best, knowing what the actual signal is, and knowing how to eliminate the noise, that's what's best. And, Barry Ritholtz comes on, and he's on all the time, and his company. And so we get inundated with information. Dave Rosenberg comes on, and these guys are these are intelligent people who speak well. They have great sound bites. I'm not putting anything against them. I'm simply saying it's probably not going to help you. And look, I used to go on the cable shows too. I've been on all of them. I happen to have a good knack for them, meaning one of your jobs when you go on is to have good sound bites. You need good sound bites. And I did. But I did not feel that it was actually helping people. I felt that it was actually adding to the noise and the information and the age of distraction. So I chose to step away. But for those who don't know me, I am a certified financial planner. I am a registered investment advisor. That means I am a fiduciary for my clients. I am part of the Financial Planning Association, and I'm part of the National Ethics Association. I am married. There's my wedding picture 11 years ago, my beautiful wife, and there are my two little kids. This picture is a few years old, but I just love it because this was a weekday and we were just out at the beach, just enjoying. So enough about me. Let's get to the topic. So where are we today? Okay, please write this down. Please write this down. Your strategy is what you want to invest in, not assets. You don't invest in assets. You first invest in the strategy that buys the assets. And this is true for everyone. Those who have their big box advisor doing things for them, what they're really doing is buying into a strategy called a trust and like my broker. And history is very clear on how that performance does over time. And history says that is going to underperform the S&P 500 every year on average between 1% to 3%. So we know how that strategy does, and that is the most used strategy. So what you are buying is your strategy and not the asset, and I'll describe that more as we go on. So look, I want to read this to you. This is from the New York Times. 2 years ago, gold bugs ran wild as the price of gold rose nearly 6 times, but since cresting 2 years ago, it has steadily declined almost by half, putting the gold bugs in flight. The most recent advisor from a leading Wall Street firm suggests that the price will continue to drift downward and may ultimately settle 40% below current levels. The rout says a lot about consumer confidence in the worldwide recovery. The sharply reduced rates of inflation combined with resurgence of other more economically productive investments such as stocks, real estate, and bank savings have combined to eliminate gold's allure. Although the American economy has reduced its rapid rate of recovery, it's still on a firm expansionary course. The fear that dominated 2 years ago has largely vanished, replaced by a recovery that has turned the gold speculator's dream into a nightmare. Very interesting. Look at the date. August 29th, 1976. Now, this was written days from gold bottoming. Gold had gone from $35 to $200, and then from $200 down to $100. And before it bottomed at $100, this article was written in the New York Times. The same week, gold bottomed. And then from 1976 to 1980, gold went up 800%. So our brain believes what people write, and it is dangerous to get distracted. Now, this article could have been written last week. The point is, things don't change. It's amazing. Things do not change. So look, where are we today? This is the Japanese government bond. This is the yield on the 10-year Japanese government bond, and it is negative. Now, this goes back to the 80s, and you can see that this trend has been falling. It's maybe not clear because the screen might be small for you, but if you look here, yeah, you can see that this is below zero. That is below zero. Pretty amazing. And it's not just the Japanese government bond. Yeah, look at this. It's the German bond too. It is below zero. Now, guys, these are two major currencies. These are two major currencies. These are two major economies. The main currency behind the euro is the German mark. All right, these are two major bond markets. This is a big deal. Where we are today is we're in a world where the yield on bonds is negative. Now, there have been books written on debt, which is the same thing as bonds, going back 5,000 years. The book doesn't go back 5,000 years, but the research goes back to 2000 BC. And for 5,000 years, going back, I said 2000 BC. I think I meant 3000. We've never had negative interest rates at a government level. Never. So clearly things are unstable going forward. Now, gold does great when real interest rates are negative. A real interest rate is when you take, and people can take different interest rates. Some people take the 2-year treasury. Some people take the 3-year treasury. Some people take the 10-year treasury. But when you, each one has its own numbers. But when you take the treasury yield and you subtract CPI or consumer price indicator out of it, you get a negative yield. If in fact the 10-year yield is say 1.5%, inflation's 2%, that difference is a negative 0.5%. So it makes a difference. And this is where we are today. Now, gold does really well when we are in a negative interest rate environment. And that's where we are today. And there's no sign that this is going to let up. Now, one of the things, so just so you know, I've been helping people with my research and helping them with manage their money since 1998. And one of the things that I thought was interesting about Michael Tarnoff, he said, RC, what he teaches is not taught anywhere at any price. Michael came to me. He was not doing well with his investing. He was getting whipped around. He said, look, I don't need to look at the markets every day or week or month or even quarter. He was able to lower how many days a week he was able to work. And since he started following this research, he has missed every major crash in the market. This is not magic. It's math. It's science. So where we are today is we are in an area where interest rates around the world are negative. They're going more negative, and major economies are printing money. Why they're doing that is because there is instability. Okay, the next thing. Why gold? Why should you be in gold? Okay. First of all, gold does not equal safety, guys. Gold does not equal safety. Okay? The strategy equals safety. And I'm going to show you this right now. Or actually, in one more slide. But here are some properties of gold, and this is why people think gold does equal safety. So they say, well, look, it's durable, right? So it can move around. It's consistent. So wherever you are in the world, a 24 karat gold 1 ounce is the same. Unlike oil, there's about 65 different types of oil around the world. So it's very consistent. It is divisible. You can break it down. You can melt it. You can divide it. You can't divide cows that easily. It's a great exchange mechanism because it is the same around the world. And there's zero liability. Right? There's no counterparty risk. You own a US dollar or a Taiwanese dollar or an Australian dollar or a Canadian dollar or a euro or a yen or yuan, and you have the counterparty risk of that government. So why gold? Yes, it's priced in dollars, but it's priced in all other major currencies too. So the reason you want to be in gold is because it's going higher right now. And I don't mean to be sarcastic or arrogant, but the safest place for your money to be is in assets that are trending higher. Now, the real safe place to put your money is in a strategy that can identify where those stable uptrends are, which is what this LTEC strategy is about. But why gold? Because it's going higher. Now look at the screen here. This is a price chart that goes back 115 years. And this is a price chart comparing gold against the US dollar. The US dollar. Now this is the same US dollar that we know depreciates 2 to 3% a year. But look at this. We see that gold goes up against the US dollar sometimes, and notice that there's a cycle, then it corrects, and then it goes higher. So this is the US dollar. So there's periods of time where you want to be in gold, and it does much better than the most stable fiat currency. And later I'm going to show you what happens here when gold falls against the US currency. And we should expect it to happen again. The point is, gold does not go up every decade. Gold, you should not always have your money in gold, like, oh, I have 5 to 10% of my money in gold at all times. That is a tax during these down periods. You do not want to have a percentage of your money always in gold. And this price chart, this is evidence, this is math, shows you exactly why you don't want that. Now, what's really happening is there's a handoff. There's like a baton that gets handed off between gold and other assets. And I'm going to show you another chart where it shows sometimes you want to be in gold and sometimes you want to be in stocks. I just showed you a price chart where sometimes you want to be in gold and sometimes the US fiat currency, the US dollar, is better. And I think of it as like you're running around the track and there's a baton and you want to see what runner has the baton. Does the stock runner have the baton or does the gold runner have the baton? Now, I'm not saying you should be in US currencies. I'm simply pointing out that there are periods of time where even gold does not beat a fiat currency. So look at this. This screen has data. There's 4 columns. The first column shows you the calendar years. The second column shows you the spot price of gold. The third column shows you the price, not the price, but percentage increase of the S&P 500 during the period on the calendar, and then it just shows how many years was in that period. And if you notice that there's periods of time where you want to be in the stock market and there's periods of time where you want to be in the gold market, and the baton gets handed back and forth between the two. Again, it's not magic. What's underlying this is mass human psychology, literally hundreds of millions of people voting with their money. And where they put their money determines how safe they feel about the future. When people feel safe about the future, they put their money in the stock market and they continue to put more money in the stock market. When people are feeling less safe about the future, they put less money in the stock market and they put more money in the gold market. And this cycle between these two assets has been going on for hundreds of years. And this is what it looks like. If you look at the screen here, I want to show you this is a price chart of the Dow Jones going back to about 1915. And just notice when the green line goes higher, you want to be in stocks, and stocks beat everything. But when the red line falls, gold beats everything. And you can see how stocks were falling. And then stocks beat everything, and then gold beats everything. And I'm showing you the direction of the arrow for what's going on in the stock market. Right? So in between 1965 to 1982, gold beat stocks. But then from 82 to 2000, stocks beat gold. And then the baton got handed back to gold. The point that I want you to take away is that, hey, there's a safer way to invest. There's a way for you to invest that protects your money better, that grows your money better, that has you doing less things, that has you eliminating all the noise that can just show you what the signals are in all of that noise. And I'll just zoom in on one of these periods, or start with by zooming in on this period from 65 to 82 and just show you this. Now, I zoomed in on it. This is the Dow Jones. The Dow Jones from 65 to 1982, it attempted to break 1,000. 18 different times in that 18-year cycle. Couldn't break above 1,000. It got above it a little bit in 1972, but then fell down. Maybe in 76 it broke above, in 81 it broke above, but finally in 82 it just took off and went from 1,000 to 18,000 in the next 18 years. So that cycle to be in stocks, that was not the time to be in stocks. That was the time to be in gold. And if you look at this screen here, this is the beginning. Gold did not change price between 1965 and 1971. So this line would have just stayed flat over here. But gold took off and went from $35 up to $200, corrected 50% to $100, and then went up to $850. And then it started correcting. And even if you didn't get out and you waited, you still would have been up about, depending on where you bought, 500% if you bought at $100, and multiples of that if you bought down here. The point is, I just want to show you that when you know what cycle we're in, and we're in a peak gold cycle right now, which I also call a contraction cycle because the S&P 500 is contracting, its earnings are contracting. The point is that you need to know, you have to know what cycle we're in. That's going to help you protect and grow your money. So that was the time of 65. I also want to show you the cycle that we're in today, which started in the year 2000. And if you look here on this screen, I have both data on one. I have the S&P 500, which is the red line. And then I have the blue line, which is LTEC gold, up 450% during the same time period. Now, I'm going to talk about this section in a minute where it falls. But just notice here, look, the S&P did grow, and it is getting bigger while we're in this cycle. The problem is it's only about 90% better, and that's taken about 16 years to do that. You have inflation in that 16 years, and you're getting older. But to be able to grow your money or double it, take that 100,000 and it becomes 400,000 or 500,000, that gives you more security, that gives you more freedom. Now, there's a problem, at least what I see, that there's corrections while we are in this peak gold cycle, and that correction happened right there. It happened right here. And so I want to talk to you about why the first step is you have to know what cycle we're in. We are in a peak gold cycle, which means gold's going to outrun every other asset class. But within that cycle, even if you know these cycles run about 18 years on average, there are corrections within the cycle. And the strategy that I built, which is super straightforward, it indicates to you, hey, you know what? We are in a peak gold cycle, but there's periods where you just want to step aside because there's going to be some corrections, just like in the 1970s where gold went from $35 to $200 and down to $100. Now, I want to have you listen to, I talked to Richard Green. Richard Green's been in my world over a decade. And one of the things that I notice with humans is, look, when you don't know what to do, not that I know you individually, but when people don't know what to do, they do nothing. And this hurts them. It hurts them because they keep their money in the market because they don't know what to do, or they take their money out of the market and they don't know what to do. And I remember interviewing Richard. He came into my world about 2003, and I just thought it was so interesting what he said because he almost backed out from working with me and hiring and buying my research. And I just think it's apropos to listen to what he said and kind of what his thoughts were, and just to see yourself in it. So let me just go ahead and hit this.
I just now remember this. The night before the workshop started, way back then, I did them on Saturdays. I spread them out over three weeks between each event. You called me at like 8 o'clock at night, basically saying, I'm not going to do it. You're like, RC, I don't think I should do this. The timing's not right. It was something like that. And I basically said, Richard, just show up. And if you don't like the first day, you will have lost one day of your life. I don't think that will happen. But I might even said, just show up for the morning. And if we get to lunch and you think it's a complete mistake, I will hand you your money back. Do you remember that?
So, you know what? Now you mention it, it vaguely rings a bell. But I don't I did that. I can remember not wanting to
Do it.
spend the time. Well, just because it was another thing. So I was jaded. So just to give you a little background on Richard Green, I've been involved in the tech industry for about 25 years. And I've been on the executive management team of 8 startups, of which we sold 6. So, I live in a great house, I earn a great income, I have a fabulous family, I have great goals for my life as well as affirmations for life, wife, family, and my community. I'm blessed with great fitness and health. I struggle with the most with figuring out how to become independently wealthy. And my experience had always been with sort of big-name brokerage houses who would happily put me in stocks and shares and bonds and asset allocate. When the market went down, my money went down. And they'd say to me, well, it didn't go down as much as everybody else. And I just kind of didn't understand that. So I realized their motivation was to take a percentage of me, but it wasn't aligned with my success. So when I met RC, I realized I was generating a great income, but I didn't have the skills or the emotional maturity to manage wealth. So what RC did for me, which is just what he can do for everybody else, and it's just been a life changer, is figure out what I had been doing with money, which was losing it. Take control of the budget, which we didn't have, got aligned with my family, which we weren't, and put us on a strategy which would take the emotion out of the process and just allowed us to execute. It was less stress, it was less worry, it was less time spent looking at the day-to-day. So my recommendation is if you are as serious about being as successful with wealth management as you are in the rest of your life, you need to spend some time with RC.
All right, guys, thanks for listening to that. I always find it's good to know that we are not alone. Many people have same feelings as we do. But, the bottom line really that I noticed with both Richard and other people is they're just like, look, just tell me what to do. I need to know what to do. I need to know what really works. I just want to be able to plug in my money so I don't have to do this on my own. And that was one of the main things Richard said. I need to know what to do. What is the right way to do it? And he did, right? He aligned his money to the market. And I talk about aligning your money to the market and not your financial religion or not your personal beliefs, but what the market is actually doing. And I already talked about how you want to invest in a strategy and not a stock or a ticker symbol or a story. And just keep it straightforward. So those are the things that you're going to want to do to help your money grow. Okay, so now why gold stocks don't matter as much as this. So this is my kind of the third main point. The first was where we are today. The second was why gold. And now I'm going to talk about why gold stocks don't matter as much as this. And here's the thing. What's most important, and this is what you may want to write down, probability is more important, not diversification. And what I mean by this is I look in a lot of people's portfolios, a lot. And they'll say, no, RC, I'm into gold. I believe it. I got to get into gold. And they have like 12 different gold ticker symbols, right? Because they've been taught that, well, you're diversified. You get diversified. But actually, diversification does not help. And in fact, it hurts people's returns. What's most important is knowing whether you should be in gold or not. Let me explain this. So a conventional diversification would be like get some gold producers, get some gold developers, get some gold exploration stocks, and maybe get some silver, the metal silver, maybe get some mid-tier producers, maybe also get some gold, maybe get some royalty stocks, right? You want to get all these different things, and maybe get some currencies, like the Canadian dollar is kind of connected to gold because a lot of mining comes out of there. Same thing with the Australian dollar. And so I'll get some currencies. But guys, and you get some small caps, but really all of your money's in that boat. It's in the gold boat. And if gold falls like it did from 1974 to 1976, 50%, all that stuff on the boat's going to fall too. Or like gold fell between 2012 and 2015, the end of 2015. It's not being diversified into 7 or 10 or 15 different types of assets within gold. It's knowing whether gold is going up or down. That's the thing that matters most. And that's what I mean when I said probability. What's the probability of gold going higher or lower? And is gold actually going higher? Now look at this screen here. This screen is a price chart of gold, which is the blue line, of silver, of small cap mining stocks, and large cap mining stocks. When I say mining, I mean precious metal in this case. Those are the four squiggly lines. Now the blue line, which is gold, that only fell about 44%. That red circle, by the way, is where my strategy, the LTEC gold strategy, said, hey guys, step aside. Step aside. Something has changed. We're going to step aside. Now, it didn't matter whether you own gold or silver or large cap or small cap or mid cap or producers or exploration. Gold was falling. Everything was going to fall. In fact, small caps fell 90%, 90%. So it's not enough to just say, oh, we should be in gold. You have to know when to be in. This is the same circle back in 2000. Excuse me. I've been speaking out loud too much. This is what happened with gold. Gold's the red line, and it fell. That blue line at the top, that's the LTEC gold strategy, up about 2% over that time period. So knowing when and what, you have to know both. And it's not good enough to just know what, and it's not good enough to just know when. You have to know both. You're going to want to know both. And it's that combination that's the difference that makes the difference. And it works in both directions. We had a LTEC gold signal happen this year, and gold since that time is up 9%, but LTEC gold's up 29%. So knowing what to get into is as important as when to get in. One of the things, this is a result from Alan Brown, 20 years of searching, finding RC happened just in time. I now observe the markets. One of the things that Alan did not like, he was caught up in it. He got into buying newsletters and trading because he thought that's what he had to do. He went through what I call the cycle of investor awareness, where he started at the big box advisors and then went to the boutique and independent advisors. And he realized that his money went up and down with the market, minus fees, commissions, and expenses. So he decided to take it over and do it himself and got into the newsletter business, or he didn't get into the newsletter business. He bought all these investment newsletters and went to all these workshops thinking that's what he had to do. But he wasn't, and he kind of got confused. He thought he was passionate about it. What he realized was, no, I'm not. I just want to know what really works. And he was able to start to just observe the markets and no longer feel like he had to trade them. And there's a lot of people that are like him. So write this down. Align to the markets and not your belief. If you want to have your money in assets or sectors that are in stable uptrends, that's it. That's the safest place to have your money. It's the best place to protect and grow your money. And so what this strategy that I created, LTEC, that's what it does. It says, hey, we're in a stable uptrend for gold. Get in. Let me show you how to do it. Let me show you when to do it. And let me show you what to buy. And look, I think what most people are searching for, and I've been touching on this for a couple minutes, I think what most people are searching for is knowing when to be in and knowing when to be out. But not just like in and out every day or every week or every month or even every quarter, but like, RC, where are the major moves that I can be in for that major move? And if you look at the screen, the black line, which is the thinnest, that's the price chart of gold. And then you have these two moving averages. Now, those two moving averages are part of the strategy LTEC Gold. And it signaled for us when to get in. It told us how long to stay in. And it told us when to get out. And this is key because our human brains, we want to get in, get out, get in, get out, get in, get out. Because that feels better to our brain because it feels like, well, if we move things around, then that means we must be more in control. So I will feel more in control. It feels safer to my brain. But that's actually not what's best for your money. What people want most, What people want most is, I want to know when to be in, I want to know how long to be in, and I want to know what my choices are. I want to know what my choices are. And one of the things that I do with my services, I tell people, look, this is the choice for a stable growth. This is a choice for a powered growth. This is the choice to really accelerate that growth. And this is the swing for the fences choice. So I give people the choice based on, how much volatility they can handle. And that's nice. I'm not selling stories. I'm just giving the data and telling them when to be in, what to be in, and how long. And look, it's the same way. It's the same way. Gold did great between 2000 and 2011. So you had to know when to be in, but also what to be in. That LTEC gold, that 845%, that was the powered section. You know how I said there's three ways you can get in: the stable choice, the powered choice, the accelerated choice, or the kind of the swing for the fences, meaning I will tell you what symbols to buy so you can have choices, so you can get back control of your money again. Knowing when to be in and knowing when to be out is incredibly important. That is the difference that makes the difference. And even on the downside, in fact, it's probably more important on the downside than anything else. And you guys know this. One of the best ways to grow your money is to avoid the major losses. And that's what LTEC Gold, it's one of the things that you should expect out of this service. This strategy is to say, hey, just also tell me when to be out. Yeah, this is the returns in 2013, 2014, and 2015 of people who bought and held gold, which I'm just calling B&H for buy and hold. They lost about 37%. During the same time period, LTEC Gold, it lost. It lost a little bit above 4%. Now, it's just not that LTEC Gold did 32.5% better than just buying and holding. It's the mental capacity. It's the ability to, stick with it. It's the ability to know that things are going to work out. And that's one of the things that people love about this strategy. And as far as for you, the takeaway, okay, you are going to want a strategy that avoids large losses. You are going to want a strategy. Parts of you already know this, that want to know when to be in that asset, when to be out of that asset. Parts you already want to know where the stable uptrend assets are. Oh, it's gold. Okay, should I be in gold the whole time? When should I be in? How long should I be in? Should I be in gold? Should I be in silver? Should I be in large cap mining stocks? Should I be in small cap mining stocks? Those are the questions that parts of you already want to get answered in a easy to the point way. Now this is this year. This is 2016 this year. Getting in. Right? Get into gold here. Now, what you don't see is that the gold had been falling 2012, 13, 14, 15, and the signal came, get in, it's time to go. And I showed this to you before. Since that get in, time to go happened, gold's up about 9%. And one of the choices for LTEC Gold, which is the powered choice, is up 29%. So you have choices, and they're very straightforward. There are options to this, and there's always the just tell me what to do, RC, which is what part of the research is. Now, one of the choices I give people is the swing for the fences. This is what I call the precious metal newsletter killer. Newsletters are interesting. You have this agreement with newsletters, and the agreement is I will pay you, newsletter editor, who usually is an English major who's really good at writing, and I'm going to pay you, and you tell me a story, and you tell me a story that makes me salivate, like a Pavlovian way of salivating. And for that, I want one of those stories a month, or a week, or twice a week, or twice a day. Give me the story. And so I thought, well, is there a straightforward way? Is there one investment? Is there one symbol? Is there, there's a strategy behind it that can crush all precious metal newsletters? And the answer is, well, there is. And since the signal has taken place in February of this year, The swing for the fences choice is up 370%. Not bad. During the same time period, gold's up 9%. So knowing what to buy is important. All right? Look at the price chart here. This is a price chart of gold. You not only know what to buy. So it's like, okay, RC, I heard you. We need to know what to buy, but also when to buy. And if you look at the screen, those red sections, the service, that LTEC strategy would have said when to be out and for how long. And I showed you this price chart at the beginning. This is showing you gold being compared to one of the most famous fiat currencies on the planet, the US dollar. And just notice that gold goes higher, right? 20s, 70s, today. Has a correction, goes higher again, and then it falls. There is going to be a time where you will get an email from me because of this strategy that says, hey, we've had a great run. Gold has done amazing for us. It has returned. We have been able to take back control of our money and our future and our portfolio and our life. And now it's time to step aside because the cycle has changed and gold will no longer be the best place to grow our money. And how do I know that's going to happen? Because that's the cycle that's been happening for hundreds of years, not just against fiat currencies, but also against the stock market. So one of the things that parts of you are going to want to know is, RC, I get that gold's going to go higher, but I see this information and I get that there's going to be a point where it plateaus, where it starts to fall, and then that's going to be the time where I want to step aside. And I agree, that is probably what you do want to know, yeah? So I built this strategy. I built this strategy called LTEC, which stands for long-term economic cycles, right? It's a straightforward strategy that signals the major trend changes and tells you what will perform best. And I want to offer this service to you to make your life better. But before we get to that, I want to make sure you have the takeaways. Takeaway number one, in no particular order, you want to align your money to the market and not your own personal financial belief or financial religion, but align it to the market. What does that mean? You want your money, the safest place to have your money is in the stable uptrend sectors or assets, and they change over time. And this strategy tells you, the LTEC strategy tells you what asset. So it's about alignment. It's about knowing which sector is trending higher. That's the what. What do I put my money in? And the third part is, when do I get in? How long do I stay, and when do I get out? So if we never do business together, those are the things that you will want to build on your own. And can you build them on your own? Of course. Of course you can. Is it worth it for you to take a few years and tens of thousands or hundreds of thousands of dollars of lost money to figure it out? It's up to you. I figured it out. I can show you how to do it. And that's what the LTEC Gold strategy does. It's a monthly service that I show you what specific precious metals to buy. I show you what specific mining shares to buy. I tell you what leveraged positions to buy and when. And if you want to get coins, I tell you what type of coins. I look at the whole universe. It's not just a story a month. I want to show you how to do this. But probably most important, I tell you when to sell. I tell you when to get out. I eliminate that noise. And you want that noise eliminated too. You just want to know the signals, RC. That's what you want to know. And it's really unlike any other service because I tell you when to get out, of course, when to get into, but I tell you when to get out. And I let you know about your tolerance levels. Like I give you different choices, right? Do you want to swing for the fences? I'll tell you what to do. Do you want to have a nice, stable uptrend called the stable choice? I'll tell you. Do you want to kind of have a powered choice that powers a little bit higher in that stable uptrend? I'll show you what to do. Or do you want to really accelerate? I'll show you. So you have different levels. So you can make those adjustments. And I interact with you. Don't do this alone. Do not do this alone. I interact with you. And of course, you have immediate access to all the choices. I'm not going to dole out a story a month and you have to wait for it. I give you all the choices up front immediately. You have immediate access to all the choices, which is how it should be. please don't invest alone. Just like you shouldn't surf alone, or you shouldn't go into the outback alone. There's many things you should not do alone, and investing's one of those. Because if you do, you're left with a monologue in your brain, and that is a dangerous monologue to be having, or a dialogue with yourself. You want to be interacting with others. Okay, now I know there's newsletter services that sell precious metal stories and choices, and I know about them. They range somewhere between $1,500 to $6,500. I mean, there's some that are higher, but generally speaking, they're somewhere between $1,500 to $6,500 a year. And when you get into those services, they have all these upsells. And anyone who has a newsletter service, you know they have these upsells. And they're always upselling you into their other services, and then you get inundated with their other services, and you forget what you own and what you don't own, and before you know it, you have like 7 different newsletters, and you get overwhelmed, and then you just do nothing. And the thing is, when you buy a precious metal newsletter, they're just telling you about this one asset. They just keep telling you stories about this one asset because you've made an agreement with them. And they're not going to call you up or email you and go, hey, don't buy precious metals for the next 3 years. And I'll just keep telling you that until it's ready, because you made an agreement that you're paying them thousands of dollars a year, $2,000, $3,000, $4,000, $5,000, $6,000 a year to give them, for them to give you ticker symbols. That could be very expensive because they'll never tell you when to be out, and they will always be selling you the next pick. Well, I think that's expensive for your health and your wealth. So I want to make you an offer here, and I think it's a fair offer. I will take 9 units of risk, and you take 1 unit. So if there's 100 units of risk, I will take 9 of them, right? Now, I think this service that I provide should actually come with a no refund policy, because I'm literally giving you immediate access to everything, the entire strategy, all the recommendations immediately. I tell you when to be in, when to be out, what to own, what to own. I do it all immediately. All right, this is not about more activity. It's very little activity while really still being able to greatly accelerate your money. But here's the thing. If you don't like the service, I will return your money to you, 90% of your money to you in the first 30 days. So your risk has been mitigated. You take 1 unit of risk, and I take 9 units of risk. This would get you allow you to dip your toe in if that's what you want, and check it out. So if there is concern and you're not sure, I'll show you everything. And if you want your money back in the first 30 days, it's not a problem, and I'll just hand you back 90% of your money. And look, guys, it's not a $5,000 a year service. I tell you when to be in, what to be in, how long to be in, when to be out. And what I'd like to do is make this super affordable for you. And so I want to give you full access to the entire strategy today for about $1,000, $997 to the entire strategy. I want to tell you when to get in. I want to tell you what to buy. I want to tell you how long to be in. And I want to tell you when to be out. And it's not just about what I want, what most people want. If they listen to the parts of their brain, they're like, look, I just need to know when to be in, how long to be in, and what to be in. And if I can know that, then I can get control back of my future again. That's what this service is about. Now, I want to give you a couple bonuses. Actually, I'm going to give you 5 or 6 bonuses. What I did for gold, I also did for bonds. So there's an LTEC bond. There's a strategy that tells you when to be in the bond market and when to be out of the bond market. An LTEC bond is the blue line on the screen, and the S&P is the red line. As a bonus, if you sign up today, I want to give you that strategy too. As another bonus, I want to give you the strategy that I call LTEC S&P 500. Literally, it's the same thing, but just with the S&P 500. And you can see on the screen here that during the last major bull run, S&P was up about 100%, and LTEC S&P was up more than 2 times that. I want to give you that strategy too. What I also want to do is I have an online course. I have an online coaching course that I want you to have access to if you'd like. It shows you the math behind the strategies. It shows you the right mindset to have. It gives you the history of the markets, which is very important to understand where we are today. People don't study history, and if they do, they'd understand that history does repeat itself. I want to give you the white papers behind this so you can really get to the point, like this is exactly how they work. And I want to give you the checklist for those strategies. I want you to have access to the online coaching course, which is a $5,000 service. And I will not be offering that. That is not a normal free bonus, but that is a $5,000 bonus today. Here's what I think is my biggest bonus to you if you sign up today. If you are interested, here's my promise to you. I promise you'll never be upsold on any of my research. Let me be clear about what I mean by this. Once you buy one piece of my research, I will give you all of my research, both past and future. You'll get access to all the new research, all the updates, all the changes while you're a paid up subscriber. No one does this. What they will do is they'll say, I have LTEC Gold, it's $2,000 a year. I have LTEC Bond, that's $2,000 a year. I have LTEC S&P, that's another $2,000 a year. I have a coaching program, that's $5,000, a one-time fee. I would like to not upsell you on any of my research. And look, the only thing people would ever pay more is for my personal time. That's my coaching or mentoring, or if they want me to manage their money. And I give you that bonus today. I'm the only entity company that does this in the industry, and I'm super proud of it. No upselling for any other service, any other research service. And my last bonus, I want to give you monthly check-in calls for the strategy. I want to let you know what is working right now. Like I said to you before, I don't want you doing this on your own. I want to give you that 30-day forecast of the market so you can see what's coming up, so you know that you can eliminate all that noise and just look for the signal. You bring your own ticker symbol to me. If you want me to deconstruct a ticker symbol for you, I can. It doesn't just have to be about the ones that I'm suggesting to you. It's an interactive environment. And then I'll take your questions live. I'll do that. That interaction is most important because you don't ever want to do this on your own. And this is what it is right here. LTEC Gold right here. LTEC Bond, you get that today. LTEC S&P, you get that today. You get my online coaching course, you get that. You get all future research, all past research, access to all of it. You get that. You get a monthly support from me, including the alerts, including the signals. You get that for one, I think it's a low, super, super reasonable price of $997 a year. And look, go check it out. I'll take 9 units of the risk. You take 1. You can go to peakgold.org. You see it on the screen, Peak, P-E-A-K, gold, G-O-L-D.org. There's an order form there. And when you go to the order form, it's going to look like an order form that you probably would expect to see. You put your contact information, your address in, you put your credit card in, and you select the type of service which would be the PeakGold. Now, after that order form, you're gonna see me. You're gonna see a video of me saying, "Hey, would you like some extra help? Would you like to connect with me? Would you like me to implement these strategies for you inside of your accounts? Would you like me to walk through them with you so you actually take action? Or would you just like, hey, RC, could you just do it for me?" So I'm offering that up for you to connect with me, and that's what that next page would be. And if you say yes to it, then after that you get a questionnaire. Now when you go to peakgold.org, that is where the order form is, and you get the order form, and this is the follow-up. And then once you do that, you get this page, which is the Portfolio X-Ray and Strategy Session Questionnaire. This is where you're going to fill out some questions for both of us. So when we get on the phone, we can really point out where that biggest gap is in your investing and behavior and fill it immediately and talk about if there might be a fit between us working together. And that's it. It's super straightforward. You can just go over to peakgold.org, fill in your information, and get access to the information. And know that Patty, my ops manager, she will be calling you in the next day after you sign up just to say, hey, want to connect, want to make sure everything's okay. Are you getting connected? Did you get the information? Do you see where the information is? Because we want to most help you get in action. So thanks everyone for being here in my world. Thank you for listening to this. Again, I think and I believe the three biggest takeaways from this training is: one, align your money with the market, not with your financial religion, not with your financial beliefs, but align your money with the market. That's number one. Two, what does that look like? Having your money safe and growing your money is finding those stable uptrends in that major asset class or sector, which is what LTEC does. It says, hey, the major asset class is gold, and this is when we should be in. So number one is alignment. Number two is getting your money in that stable uptrend. That is number two. Number three, knowing when that trend ends. Knowing when to be out, which is managing your downside. Super, super important. And if you think about it, all three of those points are all the same thing, right? When you are aligned with the market, you know when to be in, you know what to be in, and when to be out. When you know which sectors or asset classes are in a stable uptrend, because of this strategy, you know when to be in, you know what to be in, and you know when to be out. And the third part is you manage your downside, which means you know when to be out. Those are the three biggest takeaways. And if your strategy is not doing those three, like the LTEC Gold strategy is, then I can tell you for sure your money is not growing as well as it can. So thank you, everyone. You can go to peakgold.org. I do have a couple minutes to answer some questions. You can go to peakgold.org, or you can also just call Patty at 650-257-0207, and she can get you signed up. Okay, so there were some questions that came in, so let me answer those questions for you. The first question is, hey, RC, thank you so much. Does this work in IRAs? And the answer is yes, this does. This works in any account that has access to ticker symbols. Now, there was another question, will this work in my 401k? And the answer is it will only work in your 401k if you have a precious metal choice. And if you do have a precious metal choice, then yes, it will work. Okay, next question is from Sylvia. RC, I just need to understand this no upsell. So you will never upsell us anything. So no, let me be clear. I will never upsell you any of my other research. Right? You may be offered to get some time with me. You may be offered to have me manage your money or help you implement it, but that is just access to my time and my own intellectual property to help you take action. But as far as other research, if I came up with if I built an options strategy to buy options or sell options, that would be something you'd automatically get access to. So in that case, you're correct. Okay, a couple more questions. One, hey RC, I do not live in the United States. I live overseas. Is this something that could work for someone who is not U.S. based or paid in U.S. dollars? And the answer is absolutely. This is not a U.S. based strategy. This is a strategy that is based on markets. The gold market is an international market. It does not matter if you get paid in euros or yuan or yen or dollars. What matters most is what gold is doing. That's what matters most. So yes, it absolutely works. And I have a lot of clients and people who buy my research that do live overseas. Let's see. Okay, a couple more questions. Hey, RC, minimum. Is there a minimum account? Sometimes I feel like I have to be really rich and have a lot of money. Is that the case? And absolutely not. I mean, I get this question a lot. What is the minimum amount? And look, this is about getting educated. This is about educating your brain and understanding how to behave. And if you only had $10,000, or if you only had $50,000, if you only had $100,000, meaning you didn't have $1 million or $10 million, the most important time for you to learn how to grow your money is right now. And it's better to learn how to grow your money when, quote unquote, there's only 50,000 or there's only 100,000. And one of the things I remember that Richard Green told me, he was one of the guys that I had you listen to. Well, it was the only guy I had you listen to. One of the things I remember him saying is, RC, in today dollars, I spent $250,000 on my college education. And I'm not even sure if that helped me earn money. I mean, maybe it did because Stanford's kind of a brand name, entity in the Bay Area and Silicon Valley. So it probably did. So it helped me get better connections. But, I spent $250,000 on learning how to make money. And what I realized, Darcy, is I never deliberately or consciously invested anything into knowing how to grow my money. And though I lost a lot with the big box advisors, that was more of a passive loss. I didn't, go and, deliberately invest in my education. And so in answering what is the minimum, this is an investment into your education. Whether you are 50 years old or 60 years old or 70 years old or 30 years old, you're going to be around for 10 or 20 or 30 more years or more. And that is 10, 20, 30, 40, 50 more years that you're going to want to understand how to grow and protect your money. Okay, lastly, hey, RC, how do I get on your calendar? I definitely want to connect. This is not about the information that we covered, but how do I get on your calendar? Super easy. You can just reach out to Patty and say, I want to get on RC's calendar. And you can just email Patty at patty@fearlesswealth.com, or you can call her at 650-257-0207. And that is, we are real people. This is not a 1,000-person company. This is someone, me, who is extremely passionate about learning what really works in the markets. And the LTEC Gold strategy is just one example of that. And I look forward to having you in my world. I look forward to helping you protect and grow your money. And thank you so much for being here for this training and understanding clearly what the takeaways are, both aligning with the market, knowing where those stable uptrends are, and knowing when to be out of them. Those are the three big takeaways. And to have me offer you this service so it can save you time, save you money, save you stress, and just know where to be, when to be, and how to be in that. Thank you guys so much, and I look forward to connecting with you at the next monthly call. You guys take care.